Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. As we head into the final week of January and into the second month of 2023, global monetary policy tightening, China's reopening and the de-dollarization, they're clearly emerging as three of the biggest and most profitable macro themes of the current financial climate that we find ourselves in right now. This in return, it's fueling one of the greatest wealth transfers of our lifetimes, presenting savvy traders with a magnitude of highly lucrative back-to-back money-making opportunities on a daily basis. The great news is this trend is here to stay and set to continue throughout 2023. Commodity prices have already made an explosive start to 2023, with everything from the metals to the energies to agriculture skyrocketing to multi-month highs to post their best start since 2009. So far this month, aluminium, copper, iron ore, zinc, lumber, soybean prices, they've all soared by an average of 15%, whilst precious metals, they have scored their longest winning streak since the summer of 2020, with gold and platinum prices surging to fresh 9-month highs. Meanwhile, gold prices in multiple currencies, including the Japanese yen, Turkish lira and the British pound, they have made all-time record highs. The bullish momentum also spilled over into other commodities, with energy prices rallying to their highest since November, with WTI crude oil breaking back above $82 per barrel, whilst Brent crude oil topped $89 a barrel. But the best performing commodity this month is tin. Tin prices, they've snatched the headlines this month with a blistering gain of over 32%, marking its biggest monthly rise in over 32 years. All in all, every possible commodity imaginable has racked up notable gains already within the first month of 2023, outperforming every other asset class out there. And this is just the beginning. Looking ahead, the most highly anticipated week in global banking monetary policy is finally here, with a trio of big three central banks due to announce their first interest rate hikes for 2023. This week, it's all about global monetary policy tightening, with traders' attention now firmly focused on the outcome of the Federal Reserve, European Central Bank, and the Bank of England next week, as each face different challenges relating to inflation and growth outlook. Taking front and center stage this week will undoubtedly be the Federal Reserve, especially as expectations are running high that this could be the Fed's final rate hike before policymakers hit the pause button on their most aggressive hiking cycle, or even bring it to a complete end. Last week, the Bank of Canada, they raised key interest rates by 1/4 percentage point, but surprised traders as it signaled a readiness to put further rate hikes on hold for the time being. The fact that a major central bank in the G10 economy is on the verge of ending its tightening cycle, interestingly also weakening the US dollar versus its major rivals, that ultimately indicates traders have already begun pricing in the possibility that the Federal Reserve could follow suit after delivering what is expected to be a 1/4 point hike next week. Elsewhere on the radar will be the closely watched US jobs report and hotly anticipated OPEC meeting, which always has the potential to move the market significantly. Extraordinary times, they do create extraordinary opportunities, and right now, as traders, we are in one of the greatest eras of wealth creation the world has ever seen. Whatever long-term goal you might be looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to give yourself the gift of a better 2023. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we have transparently documented throughout our weekly videos. If you're trading at one lot, that's $100,000, and if you're trading at 10 lots, that's $1 million. As you can see from our testimonials, the majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they are making in excess of 6- and 7-figure returns annually. If you want to make 2023 your best and most profitable year ever, then now is the time to take action. Just go to www.jointhegoldensilverclub.com to learn how our mentorship program can take your trading to the next level. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we move into next week. So firstly, exactly as we stated to you the previous week, with China China often their 1 week public holidays to celebrate the new year, we have seen thinner liquidity during the Asia Pacific last week and essentially takedowns on the metals, which is exactly what we talked you through. You can see here, for example, platinum prices last week, they broke down over 650 points. They broke down 3% last week. We've also seen palladium prices, they dipped 7% last week. We've also seen crude oil prices dipping alongside silver and also gold as well. So let me just take you over to, for example, crude oil too, which also broke down over 2% here on Friday. So multiple opportunities on the sell-offs that we saw last week to sniper in and get positions on at much better prices. Everything that we talked you through last week here has played out. So again, just going back to platinum prices, they pulled back over 600 points last week. Now, of course, we have taken the opportunities on these dips in the last week to accumulate at much lower prices. As we've discussed with you previously, it is a trader's market where you want to regularly keep coming out, banking at the top of the cycle, then reloading again at the lower end of the cycle. It's not a buy and hold market. If you're just using buy and hold, you'll ultimately end up making no profit in these markets as you see the inevitable rotation back down towards the swing lows over the course of the year, and then the inevitable rotation back towards the upper end of the channels as well. The real trick is obviously understanding and knowing the cycles so you can regularly keep coming in and benefiting from these cycles. Bank at the high, reload at the low, and also sell short at the high and then buy back at the lows as well. So what I'll do, I'll just highlight some of the major opportunities that we're looking at here as we head into next week. So first of all, palladium, exactly as I stated last week, retest back down towards the swing lows here. Look for opportunities if we were to see further liquidations during the course of China being on their 1 week public holiday. Make sure you lock in profits on the breakout, and then essentially you can reload at lower prices. We've definitely got lower prices at the moment. Palladium trading back at $1,606 per ounce. So yes, I would perceive this as an area of accumulation, as an opportunity to buy the dips that were created by the sell-off that we saw during thinner liquidity last week with China off on their 1 week public holiday. You've got a 3-day impulse move to the downside. I would not expect palladium prices over the course of February to be maintaining below $1,600 per ounce. These levels I look at as an opportunity right now. We've also seen a nice dip into the close there on Friday with oil. Comes back to our point, regularly lock in those profits. As you know, with our clients at the Gold and Silver Club, we booked 4,000 points profit here on crude oil, building into multiple positions at the start of the month here in January, then taking the opportunity to scale out as we have seen breakouts to 2-month highs. Even on Friday here, we attempted to break above $82.35 per barrel. Then subsequently, we saw profit taking later on in the session, which comes back to our point, regularly lock in profits, bank on strength, because inevitably you're not going to see markets move up in a straight line. This is where you want to take the advantage. Silver last week as well. Soon as we moved into the first public holiday of China last week for their 1 week holidays here to celebrate the Spring Festival and the New Year in China, you had a 5% sell-off on silver. So exactly as we warned you last week, look out for these opportunities on sell-offs next week to buy on those dips. You can see, in fact, silver prices, they broke down to $22.80 per ounce. Then they slingshot moved back above $24.29 per ounce by Thursday. So you can see this regular volatility offers you plenty of opportunities to keep coming in and out of the market at the moment. Then, of course, moving over to gold, very much as we stated to you last week, gold will tend to struggle with China off in their 1 week public holiday. It tried to break out above the 1950 level, wasn't able to do so. Very quick moves back down towards 1915. We are definitely seeing more support coming in with gold as opposed to platinum, for example, silver or palladium at the moment. Very resilient, only really very shallow retracements right now. However, we did see again the normal dips that you would anticipate as you move into the 1 week China public holidays. And of course, next week is going to provide fantastic opportunities to capitalize on more of this volatility where you do have the Fed, you've got the FOMC statement on Wednesday, then you have the European Central Bank on Thursday, Bank of England on Thursday, and of course non-farm payroll next week as well. If gold does break above the 1950 level, I would suggest this is the zone where you're going to start seeing that squeeze higher if we do see a breach of 1950. However, as you can see with the price structures that we've seen in the last week, if you look at platinum, for example, this is now pulled back over the month of January over 1,100 points. There are some other good risk reward opportunities on the precious metals. That's also similar for silver as well. So the gold silver ratio and the gold to platinum ratio, gold has essentially been outperforming throughout the whole month of January so far. Often you can see a reversion to the mean and that rotation of capital then move into silver and platinum as they move to catch up with the breakout breakouts that we've seen on gold. So I would definitely have that on your radar as we go into next week, as we're moving into back-to-back central bank news items, which, as you know, can be catalysts for massive moves and big opportunities for you to capitalize on as we head into next week. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There is a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they will not work. Those days, they're long gone. If that's all you're relying on, then the odds are already massively stacked up against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders and only reserved for professional traders in banks and hedge funds with access to powerful game-changing insights, including where banks and hedge funds are buying and selling in real time, the key liquidity zones so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows in the market, alongside the daily, weekly, monthly, and quarterly real-time data-driven cycles, the intermarket correlations and ratios in the market, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation the world has ever seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there is no better time than right now. If you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will, of course, get in touch with you ASAP.